I think this is probably the greatest, certainly macro trade of all time, or macro investment. It's not even a trade, it's a structural change in the way the world is working and the way the world will work in the future.
How did you make this leap? Because we all have the moment where we heard about Bitcoin, then we all have the moment where we bought some, and then we all have the moment where we realized it was important, and then we have a moment where we went all in.
6 months, 10 hours a day, threw myself into it, and I started to think, oh my God, what an idiot I was for not doing this back in 2014. It's never too late to do the right thing. And basically, I think we both realize now that it's not too late today. People listening to this, just go out and buy $10 worth of Bitcoin or 10 pounds of Bitcoin. This is really about doing. It's easier to explain DeFi once you've done something in that world. You got to dip that toe, take that leap, and you got to spend the time. You have to spend the time. It's going to exist no matter what, because there are many, many people around the world who are getting tremendous benefits from being involved in this world. Not everyone has a stable currency. Not everyone has proper monitoring, fiscal policy. Emerging market countries, for some of them, this is a godsend. The future is here, and it's just a matter of how fast we embrace it. I think that everyone should have some exposure. Every institution, every company, every person, because it is the future.
The world is changing. Inspiration is everywhere. It has never been so easy to connect, share, and bring people together. We're learning from others and finding the best in ourselves. Challenging our beliefs. Sharing our vulnerability. Overcoming our fears. Transforming ourselves so we can transform the world. How far can we go?
This is London Real. I am Brian Rose. My guest today is...
This is London Real. I am Brian Rose. My guest today is Dan Tapiero, the global macro investor, entrepreneur, thought leader, and Bitcoin proponent. You are the CEO of 10T Holdings, a $770 million growth equity firm that is building a diversified portfolio of private companies which are enabling the digital asset ecosystem. You have over 30 years of experience in macro investing, trading, research, and economics, and have worked as a portfolio manager with some of the world's most respected investors, including Stan Druckenmiller, Stephen Cohen, and Lord Rothschild. Recently, you described Bitcoin and blockchain technology as historic inventions that are akin to the birth of the combustion engine, which will have a transformative impact on our world. You've called Bitcoin's performance the greatest return of any asset in the world, and believe that one day everything we have of value will be on the blockchain. Dan, welcome to London Real.
Thanks, Brian. That's absolutely right. Quite an introduction, but I did say those things, and I do believe them. So.
Fantastic. I can't wait to jump into this, and really looking forward to just finding a little bit more about your history. I think we're about the same age. Maybe you got a couple years on me. And I think your deep experience, in the investing world is something we don't always see in this space. And I'd love to tap into some of that, as well as some of your portfolio companies. We just had Yatsu of Animoca Brands on a couple weeks ago. Our audience was blown away by the vision. Congratulations on that investment, by the way. My students used Deribit, the options trading platform. And one of my students told me about Helium months ago as far as a mining platform. So I can't wait to talk about all your investments and your perspective. Also, Dan, I think my dad and my mom might be watching this. They're in their mid-70s, and I think that maybe you might be able to explain some of this stuff better than me or some of our other guests. So so that's also on my mind while we're having this conversation. Maybe we can start off by taking a trip down memory lane and maybe go back to the 90s, where you maybe learned how to trade and invest, sitting with some of the greats in the world. I had a strange experience where I was at MIT. I was studying engineering, and I got to take some classes at the Sloan School of Management in 1992 and 93. And I learned about options trading, Dan. I learned about futures. And then I started working at Bankers Trust on the fixed income derivatives desk. And that is where I got an education in trading. It was the 33rd floor. I think Dan Morehead was walking around on some other floor on the mortgage desk or something. I didn't know him then. But I got a real education, Dan, of what real traders were like, how they looked at risk, the foul language they used, the abuse they gave me. But I probably learned more on that trading floor in a week than I did in a year at Sloan. And I'm wondering if you had similar experiences being on these desks, with these kind of great long-term investors. And do you think that part of that will never, ever come back, those old school trading floors and some of that knowledge? So just some of your thoughts.
Yeah, well, I mean, that Bankers Trust, 92, 93, I was at Tiger Management then. And I think that, and I was sort of in charge of executing European swaption positions for Julian and the portfolio. And there was a guy there named, I guess, Stephen Hale, who was a salesman, pretty senior guy. I think he must have been the number one salesman at the firm at the time. But, many of those bankers, the Bankers Trust at that time was a breeding ground. You had Jimmy Leitner there. You had, there was a guy I remember, Quentin Van Dusselaer. You had a whole bunch of Norm Weinstein, I think. I'm actually a little younger than those guys. I'm 53, so I'm a little younger than those guys. But they, that's quite a group of people to learn from. I think that was even rare on Wall Street, to tell you the truth. I mean, of course, you had, the Goldman desks, and you had some of the other, maybe more, not even Morgan Stanley at that time. But I had a tremendous early learning experience just like that, but it was at Tiger Management. And, at the time, Tiger in 92 was a $3 billion fund. And at the time, no one had heard of what hedge funds were. And people were thinking, anytime I said to somebody, I'm working at a hedge fund, they didn't know what it was. It was early days. And again, the focus then was the RM crisis. And I sort of had trial by fire. I was the young, 23, 24-year-old guy that they hired to come in at 3 a.m. For Europe. And I would come in and work at 3 and leave at noon. And I was executing and doing analysis as well on the European bond and currency markets. And if you recall, those are the great, days of, currencies breaking out of the ERM mechanism. And so funnily enough, the first currency trade I ever did, again, it wasn't my idea, it was Julian and my bosses at the time, but was the breaking of the Irish punt out of the exchange and ERM mechanism. And, you're in the UK, but I remember, never forget, I found some liquidity through, I think it was Credit Suisse. There was only one guy in the whole marketplace that was tapping into the Irish Central Bank and was allowing us to sell Irish punt, buying D-Mark, selling Irish punt. And never forget, had the trade on. We weren't sure when it was going to work. And I woke up on one Saturday morning early, as I did in those days, pulled out my Financial Times, and on the front page across, Irish punt devalues 10% or whatever it is. And as you know, for currency people, a 10% move in one day is just unheard of. And so, being at the front lines there, seeing how Julian positioned, how he thought about investments. At the time, my two bosses as well, David Gerstenhaber, Barry Bizzano, they ran the macro group. And I was sort of the young guy running around, getting positions on for the firm. And again, the attention of the firm at that time was really almost exclusively on macro. And, you have some of the great names in the money management world who were there, Andreas Halverson, Steve Mandel, Lee Ainsley. I mean, it's John Griffin, it's a who's who of the greatest portfolio managers on the equity side. But the attention at that time, funnily enough, was really just on macro. And, it could get very heated at times. But, that's how you learn best, right? Julian calling you up at 4 a.m., asking you about a position. And, if you get something wrong, I mean, you're toast. I mean, you were completely toast. So I wouldn't say I lived in fear and panic that time, but I really enjoyed it. And that experience was sort of the defining early experience of my career. I would say even the way that I invest now and the analysis that I've done over the years and the teams that I've built to work on analysis, a lot of that was just early, comes from having that early background at Tiger, seeing the investment memos, the care, the focus that goes into building an idea, a macro idea, all came from my early experience at Julian. And so also my sort of longer term holding period. Look, it also suited my background. I'd studied history at Brown. I did a BA, MA in history, and it was really, I did what was called at the time intellectual history. So I was used to reading a lot and then coming up with a thesis. And that's basically what investment is, and coming up with a thesis that other people don't see or not, or not aware of. So my personal sort of orientation fit well with Julian's style of investment. So that was my sort of great early learning experience.
I almost feel like I was there with you. Were you part of the group that like went head to head with the Bank of England in '92 and kind of broke the pound, or were you around when all that was happening?
No, not really. That was Druckenmiller and George and a bunch of the other guys. We were not that active in the pound. In fact, after the pound went, it just made sense to us that the punt would go, because the punt was trading more with the UK than with Germany at the time. So there was a fundamental misalignment. So we kind of expressed the bet in a different way. We had a very big position in gilts and in UK swaptions at the time, after the deval, after the break in '92, we then saw that interest rates had to come down pretty dramatically in Europe, but also in the UK as growth slowed. And at the time, Germany suffered its worst recession since the war.
Yeah. And this is a great vision for maybe people watching us now that maybe have only known the markets of cryptocurrencies, which are 24/7 public blockchain. What Dan's talking about is finding that one trader at Credit Suisse that would actually even give you the exposure and the size that you needed to this currency. Back then it was all over the counter, which meant it was all fairly quiet, which meant you had to be talking to the right person at the right time, oftentimes putting on a derivative that wasn't publicly posted. And if you didn't know the right person at the right fund, you might, first of all, never know the trade happened and never even know the liquidity was there, right?
Oh yeah, I don't think anyone knew we had the punt position on except for the guy who executed it. Again, we then took positions later on shorting the peseta and the Italian lira, and we're part of breaking those or having, pressuring those. We weren't, look, we were doing fundamental analysis, okay? And we just said that based on the fundamentals, the macro fundamentals of the country, the valuation of this currency as it is pegged today is incorrect. We weren't doing anything duplicitous or nefarious. There wasn't any sneaking around or doing weird things. Nothing, it was completely above board. We were taking a fundamental bet, and we were taking quite a lot of risk. Julian's appetite for risk is like no other. And that'll be, you can get that confirmed by anyone who's worked with him closely. And so, we had very big positions, but we could have been wrong. It wasn't that we had there was no inside information or anything like that. It wasn't, as I said, done, there was no nefarious. We were just fundamental investors building a view that said, we really think this currency is worth, X, and positioning. So no different than any other fundamental investor investing in any of the other asset classes.
Lessons that you try to pass on to people in your firm or the younger kids that join you over the years that you learn from Julian or some of these other people? I'm not looking for one sentence slogans, but are there any basics that you try to pass on?
Oh boy, there are so many basics. One thing I like to say to the guys always is, it's never too late to do the right thing. So it's a bit of a funny little statement because, markets tend to trend, at least the ones I'm involved in. And, often you have to pay the high price, and sometimes people hesitate. And then they don't buy the high price, and then it doubles, and then you don't buy the high price and it doubles again. Now, if you've done your work, okay, if you've done your work, it's okay to pay a high price. If you have a fundamental view that you've developed and you've spent an enormous amount of time on, and you believe in it, and you say, I'm buying this thing at 1, I really believe in the next 3 to 5 years it's going to 10. Then if you really believe it's going to 10, then you can buy it at 1.2 and 1.5 and 1.7. And so that's sort of a little tricky thing. I say it's never too late to do the right thing. The issue is you got to know that it's the right thing. And that's a whole other story. But there's a caveat to that, which is that I always also say you only get paid when you do the work. There is no one has ever made big money by chance. And if they make it by chance, the odds are that they end up losing it. And so what you need is a repeatable process. You need to be able to have a process where you have a habit of doing a certain type of work. You're looking for certain types of things. And I always believe it's very important to write these things out. Now, look, I come from a period, from a place where, when I was in high school, I wrote my senior history thesis in pencil. We had a computer that took up in my high school an entire building, and there were 5 terminals around that computer, and we were one of the only schools in the country that had that kind of computer. So again, when I mean write it out, I mean really think through, write things down, type things out, and be able to explain yourself clearly. I think that people today don't value the ability to express a complicated view simply and clearly. There's not enough value placed on that in the schools, in the educational systems, and that of course reflects a clarity of mind, right? And if you can't explain it clearly, you don't understand it. So those are sort of some basic things that I try to get through to people.
Yeah, that's fantastic. I learned so many lessons being there at BT for those couple of years. And even people, I think Dan Morehead was at Goldman, and he came to BT on the mortgage desk, and he said that was even a rare place because everybody was pulling the trigger.
Very rare.
Yeah, very rare. I kid you not, Dan, I got there 22 years old, and they sat me down on the fixed floating swap desk and said, here's a phone that goes to the Mercantile Exchange. Here's a phone that goes to the Board of Trade. Here's the box to the Treasury guys. Trade. They were like dumping right in. And then I think the swap trader left 8 months later, and I was trading the whole damn book for like...
That's how it worked back then. Yeah.
and I was sitting on this desk. They were doing the craziest stuff, the time trades, the this and that. I think I know Steve Hale was on the financial institution desk, probably talking to you guys. He had Sarah Sprung, the prop desk. It had like 15% of the Irish debt at one point. So all this crazy stuff was happening. And then not only that, all of the ego and angst and positioning from a social point of view that I got to watch as a 22-year-old, it was like a mind-blowing experience that maybe someday I'll make a movie about.
Yeah, there could be a good movie on that. Of course, I've known Dan for over 20, 25 years. He was at Tiger after me. And actually, Dan is now, he's in the crypto space. He launched the first venture fund in the entire space in 2012 or 13.
Yeah.
He's a great guy. He's had massive success. He's one of the few guys from my world that has pivoted. Of course, there's Mike Novogratz as well, who was sort of in the same space. And now you're starting to see, Alan Howard, actually, who's a bit older than me, also sort of pivoting more to the space. But some of the older, more traditional guys who I worked with, I don't know, it's just, if you've had such massive success like they have, thinking about the world in a certain way, there isn't as much of an incentive. And it's also extremely complex, this new world. But I don't want to jump the gun. I'll let you answer ask all the other questions.
And I'm glad you brought up those people because, we had Morehead on the show, and we spoke to him in length. And again, he did his Bitcoin fund in 2013 and has had massive success, was pitching the fund when nobody wanted to hear about a fund for Bitcoin, and did all the hard work, has some funny old stories about Coinbase when there was one employee, and all these funny things. Like I said, Novogratz, he reminds me of one of those kind of old school traders, but you only know it when you've been around it, and he brings a lot of energy to the space and gravitas. And that's why it's great to have you here, Dan, because again, there's not many like you guys that are jumping basically into this new space with all of your old knowledge and bringing a whole different dimension to it, I think, which I think is really interesting and exciting. And so let's jump into this. How did you get to have an almost $1 billion portfolio in these fascinating companies like Animoca Brands? Again, we just had Yatsu on and blew us away. Deribit, a great exchange my students use. A bunch of your companies are things that we use here. And I'm wondering, how did you make this leap? Because we all have the moment where we heard about Bitcoin, then we all have the moment where we bought some, and then we all have the moment where we realized it was important, and then we have a moment where we went all in. So what was your journey?
Right. Yeah, you've described at least the thumbnail of it right there. But look, I think this is probably the greatest, certainly macro trade of all time, or macro investment. It's not even a trade, it's a structural change in the way the world is working and the way the world will work in the future. I mean, look, as I said, you mentioned I spent, almost, 20, 25 years in the macro hedge fund world and worked for those guys who you mentioned, and had, quite a bit of success managing a portfolio, but again, coming up with ideas and important ideas that, ahead of other people, structural developments, macro changes in the world. So that was, a big part of my experience. But I also launched 2 businesses, and this is a bit different, that probably are not as aware of. When I was working with Druckenmiller in 2006, I was very focused on agriculture. Had written our traditional 50-page investment memo about the coming bull market in ag. Stan and I had very large positions in grain futures and swaps. And I just remember him saying to me, this is a great thesis. What else can we do with this? And I sort of went back to the drawing board and came up with this idea that farmland prices in the US could double in the coming 5 years. And he loved the idea. And I came up with my own ways to measure, valuation metrics for farmland. Went out there, saw that it was a big universe, certainly more than $1 trillion market if you added it all up, and came up with this idea for AgCoa, which was eventually, by 2013, 7 years later, became the largest private farmland REIT in the US. We ended up selling it to the Canadian Pension Fund System, CPP, for $450 million. And then just last year, the Canadians sold it to Bill Gates and his firm Cascade. So Bill Gates for $1 billion. So Bill now owns all the original farms that we started buying in 06, 07, 08, et cetera, et cetera. And again, that was an idea where I thought, okay, we have a position in the underlying. How else can we express this? And, again, Stan and I owned half. The other half was owned by the Goldman Sachs partners, who we brought in to help us execute the idea. So it turned into really kind of an aggregating business. And then I did a similar thing a few years later in 08, 09. I founded a company called GBI, Gold Bullion International, with a co-founding partner. And today, 12 years later, we're the 3rd largest vaulter of gold in the world outside of the banking system. I was really trying in 08, 09 to buy physical gold. I was worried about the banks going under. And I just thought, everyone told me, oh yeah, they stored their physical at JP Morgan or at a bank. And I'm just thinking, if I think the bank is going to go under, why would I ever hold my gold at the bank? And I just couldn't find a really legitimate way to do it. And so with a partner, an ex-Goldman Sachs partner who had just retired, we launched GBI. And again, today it's done over 1 million trades for clients, over 300,000 clients. It's a fantastic platform. In 2014, the gold company integrated with a company called BitReserve. And that's when I learned about Bitcoin, BitReserve today is the Uphold wallet. We were the first place that you could buy and sell physical gold to buy and sell Bitcoin and Ripple. And we spent a year integrating with BitReserve. And so we had a lot of younger guys at the firm, GBI at the time. And I was doing mostly just biz dev for the firm, no real formal role, but I spent a lot of time, thinking about crypto, but I couldn't really, and Bitcoin, but I couldn't really get into it because, as a macro guy from my background, Bitcoin at the time was a $10 billion market cap. And I'm just thinking like, it's just too small. I remember speaking to Barry Silbert about that time, and Barry had just launched Grayscale's investment trust and went down to the office and was talking to him. And, he was telling me, this thing's up in trading, Dan, you got to do some. And I'm like, well, what's the volume? And he's like, well, we're doing $1 million a day. And that's just too small. It was too small for me. I mean, $1 million, to put on a starter position would have taken a week. So I basically ignored Bitcoin for a while. And it wasn't until 2017, 18, it was really Q4 18 that I really got focused on it. We had the bubble, we had the collapse. And, I'd seen that in my career where bubbles have collapsed. And usually when something that's gone up astronomically has an 85, 90% sell-off, it's going to zero. Like I saw with many Indonesian banks in 97, 98, and Thai banks for that matter, or, it's a buying opportunity because it's the beginning of a next move. And so I did, just like you said, 6 months, 10 hours a day, threw myself into it. And I started to think, oh my God, what an idiot I was for not doing this back in 2014. DTAP Capital, which is my own entity, which I launched in 03. I had maxed out on my SAC money back then, and they let me take in outside money. DTAP Capital started positioning in Bitcoin and Ethereum in Q1 19. And, I'm sitting there with a position, just like in the old days with my grain position. And I started to think, okay, what else can I do? How else can I express a view? There are all these companies in the space. What are they doing? I've never heard of them. I've only heard of Coinbase. The smartest 35-year-old and under guys that I've ever met are in this space. What's going on here? And I started to dig in. And it was at that time in the summer of 19 that I was at an offsite of Raoul Pal, Raoul Real Vision Television.
Yeah, we had him on the show. Yeah.
Yeah, Raoul's an old friend of mine. In fact, Raoul, when he was at Goldman in the 90s, used to cover me. So I'd known him for many, many years.
Of course. And
was one of the early founding guys of GMI, his Global Macro Investor newsletter. And every year he has an offsite, and there are 10 to 15 guys that get together, usually in the Caymans, and exchange ideas. And this year in 19, it was in Napa. And so I go to Napa and I'm thinking about this crypto stuff. And there's a young guy there in his early 30s named Clark Gillum. And Clark was investing for his family office in some of the cryptocurrencies, but also in some of the companies. And I was fascinated by that. We started talking, and he introduced me to a man who had helped him build those positions in his family office, a man whose name is Stan Moroshnik. And Stan at the time had his own investment advisory firm in the space called Element. He'd raised over $300 million for different companies and different projects in the space. And Clark said, let's get together, three of us, and put the heads together, which is what we did, and came up with this sort of expression of the idea, really. And it was really to build a portfolio that I wanted for myself. I mean, I had wanted to get into the BlockFi round, the $50 million valuation round in the summer of 19. I loved the borrowing and lending business, loved the idea conceptually, big macro view that there was going to be tremendous growth, and I couldn't. And I didn't have access. I didn't know enough about it. In fact, a year later, they raised again at 500 million. I couldn't get into that round either. So I'm kicking myself. I missed a 10X. Oh my goodness. Anyway, that just sort of, was, just added fuel to my fire to want to get involved with some of the businesses in the space. But, I'm not a venture capitalist. I'm not really interested in early stage, technologies. I don't have the skill set to be able to decipher the differences in code. I can't take apart the blockchains and understand, what the minutia is. And I could hire people to do that, but I'm not really interested in that in a way. I wanted to have I wanted to build a broad, diversified bet. And the one thing I knew was that this is a long-term investment. So I thought, okay, the private equity structure, the private equity fund structure is the right structure. And we're going to build a portfolio of 10 to 12 companies that are mid to late stage, that are in a way de-risked. I didn't want to take technology risk. Companies with hundreds of millions of dollars of revenue, companies that had already figured out, their business model. They weren't sort of in search of a business model as some of these smaller companies are. And so I came up with some criteria, sort of like the criteria that I came up with for AGCOA. And, so we don't invest in companies that are less than $500 million in market value. And in fact, of the 14 businesses that we own today in the first two funds, 12 of them have a market valuation of over $1 billion. And so that was sort of my epiphany, that back in mid-19, that the companies are actually a lot bigger than people thought. And they were a lot more profitable than people thought. And so I think we're the first fund in the world that exclusively, explicitly only focuses on these mid to late stage businesses. All the names that you know of, including, as you mentioned, Pantera and Polychain and Andreessen, most of them, Parify, they only focus on early stage, seed and angel and A rounds. Some of them are moving a little bit into the mid stage now, but for the most part, you only have like one-off sort of checks that are written by growth equity funds, like a Tiger or Coatue will drift in and occasionally, lead around, et cetera. But so far, it's just us, and there's lots of opportunity.
Yeah, it's really exciting. And now it makes sense with your background, how you were able to set those limitations. And, I think Tim Ferriss said this once, when you go to be creative, it's actually the limitations that allow great creativity. And by you limiting yourself, you've created something very unique here. And I think you break down your fund into three areas: digital asset ecosystem gateways, which are kind of like your investments in Kraken, eToro, Huobi, Mercado Bitcoin; next generation financial services like Deribit, Figure, Animoca Brands; and then blockchain infrastructure companies like Bitfury, Ledger, Helium, Figment, Prime Trust. I'm sure I'm missing some of them, but that's kind of your thinking on that. Is that about right?
Yeah, I mean, we've already deployed 90% of the capital for the first two funds, which is originally, I apologize to my, LPs, but originally we were going to invest the money over 12 to 24 month period. Those are the terms that we laid out in early 2020. Again, we were supposed to launch in April of 20, but then COVID hit and we were way late for 4 months. And actually, we didn't really launch until December of 20, January 21. And so I had not thought that we were going to invest over $700 million into the space in just 7-8 months. But we haven't paid more than 10 times revenue for any of the businesses that we own. We've been very disciplined. We passed on companies that we like. We like FTX, we like Paxos, we like BlockFi. But they raised it, 20, 25 times revenue at big valuation numbers. And frankly, when we go into an investment, we want to think at least that we can make 5 to 10 times our money. And when you're investing in something at a $25 billion valuation, it's just hard for it to go. It's harder for it to go to 250 versus investing in something at 600 million that's going to go to 6 billion. And so we pass on those investments. They're great investments. We think they're going to go up in value, but we really sort of stick to our knitting and our valuation framework because we want to have a portfolio that can go up 5 and 10 times.
Yeah, something you said that really caught my ear, Dan, is that you said some of these companies are making real revenues and people don't realize how big they are. Maybe you can speak on this kind of weird disconnect, because we've got liquid tokens and you've got the token market caps, but then you've got the equity of the company, which is a whole different animal. And most people in the crypto space probably don't even understand equity valuations, and they think, well, maybe it's all the tokens. But obviously you come from the background of understanding that's typically how you would invest in a company, is through equity. Maybe speak a little bit more about how these are oftentimes two completely different beasts, what you see as the token and what's actually happening in the company and revenues.
Yeah, that's actually a much more complicated question to answer than you think, because those two worlds are in flux, meaning, so I'll just first tell you, in terms of companies making a lot of money, Kraken, which we own, last year did $200 million in revenue. Okay. This year it's going to do 1.7 billion. So when we bought the company at a $3 billion valuation in January, we thought it might do $1 billion in revenue for the year. But you know what? It entered this business that I just call staking as a service, which in January did not even exist for Kraken. They're going to generate another $400 million in revenue just from that business line that we had no idea would even exist. And so the pace of growth in this space, the pace at which new revenue lines, new sectors are being found, it's just increasing. I guess not sectors being found, but the pace at which they're just new revenue lines, it's just increasing. It's something, it's hard to anticipate. And so we also had a rush to get the positions on, because I still think Bitcoin is going to be over 100,000 within the next 6 months. I think Ethereum could be certainly up near 10,000. And that has some impact on the businesses, not as much as you think. We can talk about that later. But let me get back to your question about equity versus tokens. I mean, the idea, but some of the companies focus on creating value for the equity holders. Some of them focus on creating value for the token holders, and some focus on both. Now, the idea behind increasing network effects through the expansion of ownership in the token, and also in the appreciation of price in the token, is a different business model for the world. And I think it's a business model that focuses on Metcalfe's law and the increase in network effects. And so what I usually, for many people in the traditional world, they'll say, well, what do you mean they're not maximizing shareholder value? Well, they kind of are, but in a different way. And so if you look, I always give the example of Twitter, because Twitter is a company that people know and understand. They don't really make much money. It's a $50 billion business. And people say, well, how could it be worth 50 billion if they don't make much money? And the answer is because Twitter has focused on increasing network effects, increasing the number of users on their network. If Twitter wanted to charge everyone $1, a year or $1 a month, they could. The network itself is extremely valuable. And so many of these businesses, especially early stage businesses, they focus on adoption of the token as a method for increasing in the future, their revenue. And, you have companies that completely have dissolved their equity, like Binance, for instance, really doesn't have much equity to speak of that I'm aware of. They have their BNB token. And so they want users in the digital asset ecosystem, users of the token, people who use their product to accrue the value that historically would accrue to shareholders in the traditional world. Then on the other hand, you have different companies that really see the value of being able to tap the liquidity that's in the traditional world, that are issuing equity because there's huge demand for it, and then deploying it in the digital asset ecosystem. And so that's another method. I mean, Coinbase is the most obvious example. They don't have a token. They only have equity. And they obviously, have had tremendous success, and they're using the liquidity that is afforded to them in the traditional world to build their business in the DAE. So there's a bit of back and forth, and some of our companies hold quite a bit of tokens and cryptocurrency on their balance sheets. And so you have to figure out what that's worth, how to value that. At the moment, the world is pretty small of equity investors in the space. And so traditionally, we're not really valuing that ownership very highly, because some of those tokens in theory can still go to zero. And that's another thing. We don't own any cryptocurrency or tokens directly. We have institutional investors in the fund who legally cannot own cryptocurrency, so we don't. And I think that's been, as you said before, about defining our focus and our purpose. I think that's been a big help for investors from the legacy traditional system to say, okay, I know what Dan's doing. He's owning businesses. I can read the income statement. I see the balance sheet. I get what these guys do. They have 10 business lines. We like the leadership. Fine, I can make that investment. If I start to talk about, the 17 different cryptocurrencies that I'm going to be trading, or that are on the balance sheet, or token economics, or blockchain technology, you start to lose, especially the older crowd. And so we try to abstract all of the complexity away. Now, I'm not going to make 100x return. There are funds in the space that bought Solana at $1 and it's now 250, and that's great. I'm happy for them, but we're not going to make those kinds of returns. But I also think we don't have the volatility or the downside risk that those early stage investments and those investments in the tokens. And last thing I'll say is just this year is a perfect example. Bitcoin sold off 50% from the high, Ethereum almost 60%, and our companies didn't budge. I mean, the value didn't budge. In fact, they probably still drifted up. And in 2018, we looked at a basket of companies. Remember, Bitcoin was down 80%, Ethereum down 95%, and a basket of companies that we looked at broadly maintained their value. So it's a different exposure. It's a different risk reward. I don't have problems sleeping at night. I don't watch the ticks on Solana or on Polkadot or anything like that. And we're not trading it. We want to hold these investments for 5, 6, 7, 8 years, as long as possible.
Yeah, you've already sold me, Dan. So I mean, really, because you're very.
Well, you have me on the show.
Yeah. But I mean, the more I learn about what you're doing, it's like you said. I mean, trying to get people to understand your model is a big chunk of the game in this space. And I think you've spoken earlier, like you'll speak to a 30-year-old that gets it, and a 6-year-old that needs more education, but it's a 6-year-old with all the money. And so yeah. I mean, it's so skewed in the money management world. I mean, it's incredible. Yeah. And you need to kind of explain. Also, it's a nice way for them to get their feet wet. And that way you take everything off the table that would normally be red alarms or signals. You're probably doing an incredible job of actually educating and bringing up the space and getting them comfortable with what you're doing, to where maybe 2 or 3 years from now, if and when they're ready, they can go for more risky pieces.
Well, that's exactly, Brian. That's exactly what happens, and we're almost like a gateway to the space for these large institutional, large family office clients, because they all know something's going on here. If you're managing a $15-20 billion portfolio, you're watching all the markets. You're an asset allocator. You see the return. You see the alpha being created.
To continue watching the rest of the episode for free, visit our website londonreal.tv or click the link in the description below.